Welcome to Wealth Creation Investing. My name is Forex Joe. In today's session, we're going to be talking about price action, the Euro-US analysis for Tuesday, January the 29th, and how to understand what the charts are saying. Now, as you read this disclaimer, hopefully those of you that are taking the trade plan alerts are reading these on a daily basis. Usually we have an analysis of what's happened the previous night as far as the trades, and then we have each and every afternoon updated trade alerts going into the Asian session. And as you take a look at these wheels, you can see that the 15-minute chart is doing all the work to the far left-hand side, and everything that I do begins on the daily chart right there in the middle. And I'm looking at a daily, weekly, and monthly chart scenario. So what we're going to do is go through each one of these charts and show you what to look for those of you that are wanting to become full-time traders and learn price action. And in the process, those of you that want to become full-time traders, if you will do this exercise every trading day for the rest of 2013, you will have a light bulb moment and the light bulb will kick in. So without further ado, let's begin the process. Okay, welcome everyone. This is our price action for the Euro-US dollar. It is around 3 o'clock Eastern Standard Time on January the 29th. In this current session, I've drawn lines on the 15-minute chart. The high was around 34.97, 34.98 area. In fact, let's see if I can move that up a little bit. I think it's been around 34.98. There it is. 34.98 is the high. We have a low down here of 34.14. So that's 84 pips. And as you can see, we pretty much stayed within this range of 80 pips. We're looking at a pair that's kind of consolidating to see if we get enough news. With all the news that we have for the rest of the week, we have an aberration because on Wednesday we have the FOMC meeting. The FOMC meeting is Wednesday. Then, besides Wednesday, we have on Friday non-farm payroll. These will probably be the deciding factors this week on whether the euro will break above 3,500 and close above 3,512 on its way to 37.28, or whether we will stay within a range with 3,500 holding and possibly come back and retest 34 and maybe break back below 3,400 to the 33.29 area. So basically we're stuck right in the middle of this range as we're looking to see if we break out. You are very prepared. You have the numbers. The numbers have been given to you for the last 2 weeks. I want to encourage each and every one of you to do this price action on the euro dollar daily and also the price action on the currency pair that you're stocking. If you will just do those two pairs every day for the rest, anytime that the trading sessions are open that you're on your computer, do it every day for the rest of 2013. You will become an expert in price action. Now, as you can see, we have this on the 15-minute chart. Our next chart we go to a 60-minute chart. And as you can see on the 60-minute chart, we kind of get even a more detailed look about how, under current market conditions, the euro-US dollar is coming up. We see this bottom down here, and I'm going to put a line down here at this bottom like we always do. This is on the 60-minute chart, and forgive me here, I'm trying to talk and do things at the same time. So let me put something right there, and this is going to be about 32.65. So right now on the 60-minute chart, this goes all the way back to January the 23rd. You can see the date down here, January the 23rd. So now we have a little bit more of an extension from January 23rd where we hit a bottom of around 32.65. We've come up to 34.14. We're now trying to come above the 3,500 area, and you can see this continuation. So if you've ridden this pair from 30.77, you're in a few times, or those of you that's been doing battle have seen this pair go up from 30 to 65 all the way up to the current as we're trying to get up to the 3,500 area. So that's a pretty nice little run here since January the 23rd. Our next number to sequence now is a 4-hour chart. Now, a 4-hour chart, you take 60 minutes times 4 hours, but we only have a 5-hour chart on this chart that I'm using. So this is a 5-hour instead of a 4-hour chart. Now we get even a more magnified look at the euro US dollar. We can see that the pair has continued to rise even on a 4-hour chart. And we'll go all the way down here, and we'll put a line here at the bottom. And this is right at 130. Right there is 130. So this goes all the way back to the beginning of the year. This is January the 4th, folks. January the 4th. So since January the 4th, we have been right at around 130. It dipped just maybe a pip or two below that. But since January the 4th, and today is January the 29th, we've seen a low of right around 130, maybe 129, 99, 98. And we've risen all the way up to 34.98. That's about almost 500 pips for the month. Now, in my analysis at the end of the year, we talked about that we were going to see at least 5 pairs this year that's going to move at least 2,000 pips. Well, right now, we've got the euro US dollar that's moved almost 500 pips, 500 pips for the month of January. Quite a move. But if you take a look at the yen crosses, take a look at the US yen, take a look at the pound yen, take a look at the euro yen, the Aussie yen, you'll begin to see, if you take a look at those pairs, where we've had even bigger movement of why my analysis of us going to have at least 5 pairs for 2,000 pips could become reality. Now, many of you are in the yen crosses at numbers of huge significance because we've been giving them to you in the report since the middle of December. Also, the US yen, many of you are in around the 79.50, 80 area, and it's moved all the way back up to 90, and we're trying to approach 9,100. Now, that has been going on since December, but it has been nice movement for not only the US yen but other yen pairs. So this is something to take into consideration. And if you're going to trade and expand your horizons, and you're going to trade into situations to where you want to look at more pairs, then take a look at those yen crosses. And I'm going to be doing that here before too long when I do a series of videos talking about all these pairs that will be in training for the next boot camp that I'll be putting together. So as you look at the 5-hour chart, we have a more defined outlook of the charts of the overall trend continues to be up from 130 almost to 135, almost 500 pips. Now as we go to a day chart, it is even more profound. A day chart goes all the way back to September the 10th, 2012. September the 10th, 2012. So what are we going to do? We're going to continue our process of looking for the bottom. We see that about right here on this candle. And we will attempt to draw this line, if you'll bear with me. 2660. So now, since around November the 14th, November the 10th, somewhere in that area, we now have a situation to where that the euro has seen a bottom of 2660. From that 2660, we have risen all the way up to almost 135. So if you round it off and just say 27 to 35, you can do the quick math. That's 800 pips, ladies and gentlemen, 800 pips in less than 3 months. Now, we do know that the euro only moved about, 1,700 pips all of 2013. But in the last 3 months, almost 3 months, we've moved about 800 pips. So it'll be interesting to see with the numbers coming out this week whether we have a reversal and a bounce off the 3,500, 3,512 area that you already know about, and it retests the 3,400 and the 3,329, or whether we have a breakout above the 3,500 number and we begin our ascent to 37.28. But here's the key to the exercise. This is something that you need to pound into submission. If you just follow the numbers and draw these lines, we went from a 15-minute to a 60-minute to a 5-hour instead of a 4-hour, now to a day chart. And if you understand the numbers, if you get the reports on Friday and understand the numbers and the reports that you need to do on Saturday, when you get the reports and we have all 22 pairs with the last 5 sessions, what the nearest 2 out of 3, 3 out of 3 channels are in a sequence, and you look at the ranges that I am putting together, then you are fully prepared as a swing position trader. You are fully prepared as a swing position trader, folks, for the upcoming week in the markets. If you will do this process daily, and all we're asking you to do is the euro, US dollar, and the currency pair that you're stocking at the bare minimum if you want to become a full-time trader. But if you're really rambunctious and you've been trading for a long period of time, you can actually put these charts and save these charts, and then you can have them for some of the movements like I alluded to earlier, the yen crosses. But if you follow this process on a consistent basis, you will begin to see reoccurring trends. And as you get to the 4-hour chart and then you take a look at the reports from Friday and sometimes Saturday morning, for the opening of the markets next week with the 2 out of 3, 3 out of 3 channels and what it's done the previous 5 channels, you are fully prepared. Right now, as a swing position trader, we are looking for and waiting for a breakout of 3,500 and close above 3,512. That's all you're doing. Or you're looking for a bounce off that area for a retest at 3,400. And if we get enough positive news from the FOMC and Bernanke's conference, also with a positive non-farm payroll number, will break below 3,400 and retest 3,329. Those are the only 2 alternatives that you have. It's either going to break above 3,500 or it's going to break back below 34, retest 3,400, and will there be enough momentum to go to 3,329? And if not, well, you just get kind of uneven numbers that stays within these ranges. As long as you understand this concept, as long as you understand these numbers, and you can do this if you're wanting to become a full-time trader and draw these price action charts, you will be fully prepared in doing battle on a daily basis, ladies and gentlemen. Now, as we go to the weekly, now all of a sudden we have a reversal of fortune. The reversal of fortune suggests that on a weekly chart, since here is the high, we see this low all the way down here, we are in a retracement from a huge move. So remember, in the 15-minute chart, in the 60-minute chart, in the 4 or 5-hour chart, in the daily chart, all those charts, remember what we talk about, trends within trends, trends within channels, channels within trends, channels within channels. The movement has been up. We have showed you to where from the 1st of January, right here, 130. 130 since the 1st of January, all the way over there, folks. It has went up. Then all of a sudden we go to the 5-hour chart, 2660. It's been going up from that period of time. Now we have to take a look at the top and the bottom of these channels. So as we draw our line here, let's put this right there. And I'm going to round this off a little bit. And it's very difficult to do this. There's 4890 rounded off. This 4890 is the top, near the top of this. And then we go all the way down here. And we'll see this here. This is 2040. Well, 2035. 2035. So now we have a range from 2035 to 4890. That's quite a range. Now this goes all the way back. If you take a look at this, this goes back to May of 2011. May of 2011. So at May, right around May of 2011, we had 4890. We come down here and we see July of 2012. July of 2012, and we're looking at, this little deal here at 2035. So we're looking from that period of time, over 1,750 pips. That's a nice run. 1,750 pips is a nice run. But now we have a reversal. Now, what we were sharing with you in previous, and this is where it needs to get interesting, is that we're having lower highs. You see the lower highs? The lower highs meant that even in this chart, there was massive pips to be made on the reversals at the top, and we are at a critical spot. This is something that you need to take an advantage, because this is a critical spot. This critical spot suggests, ladies and gentlemen, that we are about at this 3,500 area, and as you can see this line go across right here, these set of candles right here, and these candles right here. If this pair goes above 35.12 and closes, and we continue up, you will now wipe out the lower highs, which means this could be a reversal, and this will retest the 37.28 area, and we have enough momentum for this to go up. Now, will that be long term? I don't know, with everything that's happening in the Euro nation. But remember how we've described the euro. We've described the euro of being in a bad neighborhood. And in a bad neighborhood, ladies and gentlemen, we have the best looking property in the euro US dollar. Doesn't mean that it doesn't have fleas. Doesn't mean that it's not really ugly. It just means it's the best looking in a bad neighborhood. Under that scenario, you have a situation here to where you must be cognizant of your charts when you're trying to become a swing position trader and understand the trends within trends, the channels within channels of the daily, weekly, and monthly charts. Now, once again, I want to reiterate this. We've walked through this process. You can stop this video. You can go back and watch the video again. On the 15-minute chart, the 60-minute chart, the 4 or 5 hour chart, and the day chart, all of the movement was from here, from here at 2660 up. You can see it here, 2660 right here, up. All that is on the 15-minute, 60-minute, 5-hour day chart. So if you boxed all this off right here, this little box would be for the 15-minute, 60-minute, 4 or 5 hour, or the day chart. Now that we went to a weekly chart, you now see even a more profound chart to where it is a reversal off a 1,750 pip move. We have 48.90 all the way up here. Here's 48.90. And we go all the way down, and we have 20.35. Now, these aren't exact. These are just close. So just so everybody knows, I kind of rounded them off. So it's over about 1,750 pips. But now we've had this reversal to where you see this line being drawn at 34.98. And as we go across 34.98, you can see where this area right here, you have lower highs. Let's follow this. Here is the 48.90. It dips down, it comes up, didn't quite make it. Dips down, comes up, didn't quite make it. Dips down, comes up, didn't quite make it. These are lower highs. Every time you have lower highs, it shows that the overall trend is going down. Now, if you have higher lows, write that down. If you have higher lows on the reversal, that means the pair is going up. If you just follow these two simple concepts on the daily, weekly, and monthly chart, you're going to be a huge success, because you're going to understand the numbers. The numbers are being fed to you. Every week you've got the ranges, and when I send out emails on Friday and Saturday with the ranges in the trade alerts, you know what the ranges are as swing and position traders, because I do it for all 22 pairs. Then we had another drop. It comes back up, and it's still what? It's a lower high. We still have a downward trend. Then it comes down here, pops back up,
Still a lower high. Then look at this nice move down, and this completes the cycle. For right now, the cycle, we've had a high of 48.90. The low is 20.35. 1,750 pip move, folks. Then we've had it bounce back up, and it's a lower high. It comes here, does not come all the way down to this area. Now we've had to where we're under current market conditions. Right now, we're sitting near the 3,500 range under current market conditions right now. And as we see this line right here, we are right at where this is a lower high. So if this pair closes, this is why I talked about 3,500, 3,512 being a huge area. You have this information. It is like gold. You'll have this information for all of your pairs. Any 22 pairs that you trade, you have this information. It's like gold. Now, to me, it's like being an insider trader and knowing exactly what's going to happen and be sitting there and just be comfortable. So you have the ranges. The only thing we're waiting on right now is the markets. With the possible news events that's happening this week, will the pair stay within a range of 3,329 and 3,500? That is the current range. Will the pair break above 3,500 and close above 3,512 and stop the chain here of lower highs for this 1,750 pip move? And we will start looking at the pair to quite possibly go back towards 37.28 and above. That's one scenario. The second scenario is 3,500, 3,512 holds. We get a series of numbers, 3,329 holds, and it's back in this range again between 3,329 and 3,500. That is the second scenario. What is the third scenario? You get a bunch of fascinating interest from numbers that the markets all of a sudden drive below 33.29 and closes, and then you start the next sequence of numbers from 33.29 all the way to 30.77. One of those three scenarios is going to happen by the close of the markets this Friday. So if you understand what those scenarios are each and every week before you even have the markets open on Sunday, you are now in the upper 2% of traders. Now think about that for a moment. Almost everybody fails because they're not trained. They have unrealistic expectations. They have an attachment to money. It scares the bejeebers out of them to trade. I mean, we can go through a list or litany of reasons of why people fail. But here is reality. And reality is such that it doesn't go away. I've been doing this for 12 years. I know every in and out about emotional and how people act emotionally. We created the gravy train method. We do a third, a third, and a third that protects you from you. Then we have the software. The software follows the system. So whenever you set the trade, unless you want to move your stop loss back from take profit 1, and some of you might do that. Some of you might get take profit 1, get take profit 2, and then you move your stop loss back because it'll come back and almost retest and then take off again. But you understand the risk if you're doing that. Others just allow it to take themselves out of the trade and start the process all over again. But no matter what you decide to do, you have a choice that you decide, and the system or the software works for you. Number 3 of the equation. You are given daily numbers with 2 out of 3 or 3 out of 3 channels of where to do battle. Number 4 of the equation. At the end of the week, you are giving what's happened the previous 5 sessions, what's happened, whether it's been an exorbitant or an amount of red or blue sessions out of the last sessions, and you are also given what the ranges are going in before the opening of the markets. So I have taken all the information off the charts, which eliminates that you, if you don't want to become a full-time trader, that you don't have to read them and learn them. You just have to follow instructions, and you are prepared for when the markets open. So since the markets have opened this week, we are trying to retest the 3,500 area, which, what is the range on the euro US dollar? It's 35.12. So if this pair goes above 35.12 and closes, looking at this weekly chart, we can see that this is a huge number, because the lower highs that we have been getting will come into play, and it will possibly knock out this 1,750 pip move, and the reversal will be in to retest 37.28 and beyond. And this is coming from 2035 all the way up almost 1,500 pips. Okay, and I think I said 1,750 pips. I meant 2,750 pips. So hopefully you were paying attention. But this movement from 48.90 down to 2035, even though I said 1,750 pips, was really, what, 2,750 pips. So 2,750 pips is a nice move. Now you understand why I think the euro in this year is going to become a 2,000 pip mover. We've already moved almost 500 pips the first month of 2013. So if we've already moved the first month since January the 4th, I showed you where it was 130 here, right there's the number, and we moved almost 500 pips. If you go back all the way to this area, this is May of 2011. This is August of 2012. That's only, what, 14 or 15 months. So in 14 or 15 months, we moved 2,750 pips. But for the entire 2012, we didn't move but about 1,700 or 1,800 pips. We already have momentum. We already have what's happening. We already have a lot of built-in insulators with everything that's happening around the world, the debt in the U.S., the tax increases that they're battling, the trying to get a balanced budget. You have everything that's happening in the Euro nations, including unemployment. Folks, the world's pretty messed up. There's going to be a lot of movements, and you can be the benefactor. So you now have at your fingertips what to look for the rest of this week. Enjoy this, and let's go through the last chart, monthly. Now, when you put this perspective into monthly, we now have on a monthly chart lower highs. See these lower highs? But we'd have to get all the way back up to that 48.90 area. Now think about this. We'd have to get all the way back up to this 48.90 area and above before the monthly chart would have a reversal for it to retest our all-time high, what, 60.35 area. So let's put our deal here and make sure we have this number. And this is very difficult, because if you move this deal, I'm going to just put 60.50. I think it's around 60.38, but we're just going to put, for simplicity's sake here, 60.50. And then all of a sudden we got to go way over here, folks. Look at this. This goes all the way back to, what, around 2000 in a decade, but we'll put it right here, and we'll draw a line here. And that's all the way down to about 83. And let me close this back up here some. As we're zooming in, let's see, we're zooming out. Okay, so this is all the way down to about 83.15. This is, you see, the euro didn't really get started till like 1998. So all the way back here in 2001, that's way down here. So you can see the overall movement from 2001 all the way up to 2008. This is actually in July of 2008. then the reversal from and seeing what's taken place. But as you take a look at the monthly chart where the pips are even more prevalent, then you have a situation here where you have lower highs. But this lower high seems to be right here at this 48.90. So if we break above the 3,500, you now have the numbers that it would have to break if we're going to retest this 160.50 or break above that to create new numbers. And that number is right around the 48.90 area. So from 135 to 48.90 is 1,300 pips. You already have that in your battle plan. Your game plan is ready. So if you wanted to know the next sequence from 35.12, it's 37.28. And if you want to go from 37.28 to the next sequence to have a reversal all the way back up to the high of around 60.38, it's around 48.90. This is the power of understanding price action. You strip down all your charts. You do it on a daily basis. You also have charts that are marked, so you can keep those charts, but you do it on a 15-minute, 60-minute, 4-hour, daily, weekly, and monthly on the currency pair that you're stocking at the very least, on the euro US dollar, because that's what I cover in the information. And if you do this on a consistent basis, folks, you will be beneficial in your arsenal. So that concludes my analysis of the euro US dollar for now. Thank you.